Good morning. The new U.S. administration has been raising tariffs on American trading partners, and it was China that got hit with the highest, by far the highest, tariffs. This is a chart since the beginning of Trade War II. In blue, we have U.S. tariffs on China. In red are China's retaliatory tariffs on the United States. The tariffs reached a high of 145% on imports from China, and exports to China were 125%. They were dropped, and now we are at 51% and about 32%, with the 90 days about to run out. Back in May, the tariffs were at the highest point, at 145% and 125%. Our top officials assumed that a lot of damage was being done to China's economy. President Trump said that China's economy is suffering greatly because they're not doing trade with the United States, and it's in the United States that China makes most of their money. Scott Bessent is Secretary of the Treasury, and he said that the situation was untenable, especially on the Chinese side. Those high tariffs are the same as a trade embargo. Neither of these statements was well supported by the actual data. It's true that China exports a lot of goods to the United States, but on a percentage basis, it's in the low double digits, just 13% of China's exports overall. And as a share of China's total economy, exports to the United States represent only about 2.7%. We pointed out in a previous presentation that supply chain managers have some tools that buy us some time. During the period with the highest tariffs, importers in the United States were stuffing warehouses in free trade zones, full of Chinese products, waiting for tariff rates to come down. Then, when they did drop, there was some merchandise available for sale, and that blunted some of the impacts that many expected. The issue on the China side, though, is that the Chinese economy has diversified away from the United States. Forbes pointed out that China is now just the third largest trade partner for the U.S., a distant third, behind Mexico and Canada. In the month of May, China was less than 6% of U.S. trade, which was the lowest level in over 20 years. In Trump's first term, it was over 17%. So China is already about a third of what it was compared to just 7 years ago. The trade routes shifted away from China and to other countries. But our trade deficits did not go down. Those just moved around too. The trade deficit with China dropped about 30%, but rocketed higher against everyone else. With Mexico, it more than doubled. Canada is up nearly 3.5 times. So if anyone thought that less trade with China would result in a resurgence of U.S. manufacturing, that didn't happen. We just started buying more from everyone else, while China started selling more to everyone else. These are the ASEAN countries, and together they have a population twice as large as the United States, over 700 million people. These are also some of the fastest growing consumer markets in the world, with a fast growing middle class. And this group of countries is now China's largest trading partner, by far, way ahead of the European Union and the United States. Looking at trade data from just the first 5 months of 2025, the first column is exports from China, next column is exports to China, then the rolling year-over-year percentage difference. Over the past 5 years, the United States overall trade is down 9.3%. Exports are down 9.9%. But here are the biggest trading partners in the ASEAN bloc. Exports to Vietnam up 21%, Thailand up 23%, Indonesia up 16%. Foreign direct investment between China and the bloc is also strong, growing over 34% year over year, and now at over $25 billion. China is also dramatically increasing its trade with South America. In 2000, China was less than 2% of Latin American trade. That's South America plus Central America. Since this trade is growing at 31% per year, and in 2024 came in at $518 billion and continues to rise. China is now South America's top trading partner. Let's pull back and see where this leaves everybody. These maps compare China and the United States. Which of the two is the larger trading partner? In 2000, most of the world was in blue, and trade with the United States was larger than with China's. 2000 was not that long ago, but it's a different planet now. Except for, what's that? Except for Israel buying bombs and missiles, every single country from Morocco to New Zealand does more trade with China than with the United States. So this helps explain why, even with those huge tariffs from the United States on Chinese goods to the US, exports out of here just keep rising anyway. January through June, China's trade surplus hit a new high of $586 billion. That's over $3 billion per day, every day, in merchandise trade surplus rung up by Chinese manufacturing sectors. What's more, it is accelerating, up 5.8% per year in June compared to 4.8% in May. China's exports to the United States were minus 16.1% year over year in June and down 9.7% for the first half, but they're going up everywhere else. Here is another myth that needs to be put to bed, that China's trade is mostly plastic toys and cheap furniture. Exports of semiconductors, ships, cars and trucks are growing faster than the overall goods number. Tariffs are hitting clothing, shoes, and toys, but these are low value-added sectors. These data all add up to China's exports growing faster than experts expected, and China's first half GDP comfortably ahead of what experts expected. Now these 90 days are soon to run out, and markets are looking for direction and clarity over what the next trade deal with China is going to look like. And this is a different world today than it was just a few months ago. Beijing's trade delegation is no doubt more confident today in late July than they were back in early January, when they had no idea what the first half trade numbers would be. Now they do know. China has found new suppliers for food and energy. Liquefied natural gas imports from the United States are down 2/3 from last year. Crude oil imports also down 2/3. Coking coal down 87%. In ag, U.S. exports to China of corn down over 90%. Beef down 9%. Soybeans and pork, China's imports of American soybeans and pork went to zero. So exports have gone off a cliff. Now I think about it, these numbers do look like an embargo. They're a disaster. But it's in food and energy that analysts are hopeful. In negotiations going forward, economists expect food and energy to be the focus because American factory products aren't competitive here. And it would be theoretically simple for China to switch back to buying from American farms and oil companies because those commodities are easily substituted. So their thinking now is that Chinese buyers are eager to switch back to US suppliers after setting up strong relationships with Russia and Iran for energy, and Russia, Brazil, and Argentina for food. And they're eager to pay higher prices. That's what they think now. This is Li Jiang. We know. Be good.
We pray that you bring mentors and disciples, family, to lead us the way, to show us to be better Christians, stronger believers, to encourage us and to love us.